Hey guys, and welcome to another weekly wrap. We've got a lot to unpack, a lot to discuss. This past week, there's been a range of different interesting narratives playing on markets. And of course, moving forward, looking up ahead, there's a few different catalysts that we should be watching. But I guess taking that step back and having a bit of a contextual view about this past week of markets. Initially, we can see there was another week of recovery. I'm sure we all remember that strong bounce from the bottoms that were put in a couple of weeks ago. And we did continue it this past week, albeit more moderately. As you can see here, the S&P500, the ASX 200 indexes both added about 1.5% at the index level. But what was interesting was it wasn't a broad-based rally across the different sectors, but it was more targeted. Namely, I'm sure many of you are familiar with the movements in the energy and commodities sector. But of course, we'll be discussing it all, we'll be considering it all. And now the question is, have we bottomed? Have we put in these local bottoms? And are we able to now start to see a bit more structure on the chart? Or are we still in a downwards trend? What's happening from here? It was definitely a constructive week, so there's a lot for us to consider. And please let us know with a comment below what your thoughts are on where we're currently positioned. And so I think just building on that contextual discussion before we talk about some of the big news articles over the past week. What is fair to say is that peak fear for this period now seems to have subsided. Of course, this isn't to say that we can't go down lower. Potentially, we could make another leg down. However, it does look like that peak fear that was really catalyzed by the start of course, the Ukrainian invasion and everything else that played out on that front, including the economic sanctions, including the uncertainty surrounding supply chains. That peak fear seems to have subsided. We know that on the fear and greed index, 2 to 3 weeks ago, that was down below the 20 level. Last week even, it was still in that 30-ish range. But now we're back to around neutral, it's quite a rapid recovery. And we've seen the same thing play out on the VIX as well. Volatility index peaked above that 30 level, up to that 35-ish level, which often has been bounced from, which we've seen particularly out over that 5-year period. And we've seen the same happen again. The VIX is back down to a more manageable longish run trend level where it's at that 20. And so it'll be fascinating to see where markets head from here now. And so just building on some of those key themes and narratives that have been playing out. I think everybody's familiar with the Ukrainian situation. We know that anything that plays out there can and will move markets. But of course, first and foremost, as we're all familiar with now, it's a humanitarian crisis first and foremost, and this is the most important thing. Of course, we continue to hope for a safe, a swift resolution. There's been no further negotiations and discussions on that front yet that have become to the public, but we're really hoping that things play out. There can be some sort of a resolution and things can get back to a new normal as quickly as possible. Kiev, the capital city, it's still not been captured yet. They're continuing to hold out strength there. Zelensky, the Ukrainian leader, has continued to garner support. Of course, he spoke at Congress a couple of weeks ago. He's been speaking to a range of different forums in different nations around the world via video link. And as a result of that, there's actually been some goods, some items, some defensive weapons which have been provided as well. And he continues to be that leader and that beacon of light for the Ukrainian people. Joe Biden as well, interestingly spoke at Warsaw and did mention Vladimir Putin in his discussion. This was just over the past 48 hours. So it's going to be fascinating to see what plays out on that front. We know that there is still a focus for Russia pushing towards a neutral and demilitarized Ukraine. And negotiations continue to play out behind closed doors, so we'll continue to look for any information on that front. Another interesting factor was that the Russian MOEX market actually opened up. We know that it was shut down, it was suspended over the past period. As a result of everything that's played out, it was only 33 stocks initially, but the market is now open. And so it's going to be interesting to see how the Russian market does open with all of the economic sanctions, the uncertainty, of course, the weakness in the ruble that's flowed through as a result of everything else playing in that macroeconomic sphere. And then just building on that, the energy and commodities update. These were a couple of sectors that have really driven things higher over the past period. In terms of the Goldman Sachs Commodity Index, the GSCI, we know that it's back to multi-year highs here. We can see that it was a bit of a retracement over the past couple of weeks after the highs, but we do actually continue to push higher across a range of different commodities. Brent crude up to 120-ish. We know that actually dropped below the $100 mark after a rapid run up to 139. We'll see what happens on the oil front. Iron ores remained consistent in and around that $150 level. Gold, it peaked above the $2,000 level. It's come back down now. And Bitcoin and actually the broader crypto market had a bit of strength as well as holding back above that 40K mark. So we'll wait to see what's up ahead. One thing to note, along with all of the commodities, is of course the Australian dollar, which is seen as a more risk-on and risk-sensitive currency, as well as one that of course is surrounded with the commodities and the significant amount of resources in Australia. It's strengthened to 75 cents and it's moving to levels that we haven't seen over this past period. So it's going to be fascinating to see how that does continue to flow through as well. And building on all of that, interest rates have started to move. The bond yields are starting to move around. We've started to see a bit of action. As we know, the Federal Reserve raised interest rates by 25 basis points over the past couple of weeks. We have done a video recently about the Federal Reserve's focus on trying to stick this soft landing and whether they can navigate and avoid a recession. We'll leave a link up above to that video that you can check out after this one. But what's worth noting is that Jerome Powell came out over the past week and he stated that the Federal Reserve will raise rates. They're willing to do what's necessary to bring inflation under control. He even did indicate that potentially, if more than 25 basis points was necessary, maybe a 50 basis point rise, at one point they would be willing to consider that. We've seen the 10-year yield up to 2.5%, pricing in more aggressive Fed action potentially over this upcoming period. And then what we can see here on the right here is the 2s-10 spreads. We know that when the 2s and 10s invert, the inverted yield curve is often used or viewed as a potential leading indicator of recession. It's close to 20 basis points right now, and it continues to move downwards. Of course, we can see here how close we are now to a neutral rate for this level. And so this is a key level that investors, analysts, economists are continuing to keep a very, very close eye on, particularly with all of the uncertainty in the macroeconomic sphere too. And then one for the calendar, one to highlight over this coming week, we've got the Australian federal budget. Before we discuss the implications of that and what that could mean for the broader economy, if you have enjoyed this video, don't forget to hit the like button. Feel free to share it out as well. We make daily videos each and every day. We'd love to have you join the community, so make sure you've subscribed, turn your bell notifications on as well. Australian budget next week. Josh Frydenberg will be handing it down. As we know, a key focus area for this budget will be the cost of living. Not only, of course, with petrol and fuel prices continuing to rise, even though they have been significant, but inflation is really permeating throughout a range of different sectors and affecting all consumers around Australia. And so this is going to be an important one. What can they do for cost of living? We know that there will potentially be some assistance as well and some relief on the petrol front. We're not sure how that will be. Will they potentially consider suspending the raising of the indexed annual rates for the fuel excise? There's a lot of different factors that could play out. We'll continue to watch this, but it is worth noting as well that, of course, there is a deficit over this past period with the Australian federal budget, but we are into an election cycle too. And so all of this is very important. It means that consumers, Australians around the nation, they're going to be paying double attention to this. There'll be even more focus, and there is a lot of different implications that could flow through to markets, which we'll be keeping you up to date on. Thank you so much for joining us. Hope you've enjoyed the video. We'll leave links up above to other videos that we've done in the macroeconomic picture. And as you guys know, I'm not a financial advisor. Nothing we discuss is financial advice. Hopefully this is an interesting discussion, however, for you as that starting spot for you to do your own research from. Thank you so much for joining us. For now, stay well and happy investing.